Hello traders and welcome back to the channel. Today, we're diving deep into a fascinating small cap stock that recently hit our scanners with some intriguing technical signals. We're going to break down TRUG Holdings Inc., ticker TRUG, and explore why it's showing up on our radar. We'll analyze its recent price action, dissect the powerful technical patterns, and lay out a potential trade strategy complete with entry, stop loss, and profit targets. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Alright, let's talk about TRUG Holdings Inc. This company operates in the consumer cyclical/leisure sector, specializing in the design and sale of golf simulators for both residential and commercial use. With a market capitalization of just $1.04 million, TRUG is firmly in penny stock territory, meaning it can be highly volatile but also offer significant percentage moves. Show company logo. TRUG didn't just casually appear on our scanner, it lit up with multiple powerful signals that caught our attention. First, let's look at the price action. TRUG is a microcap stock, currently trading under $5. Today alone, it saw an incredible plus 25.77% gain, contributing to a whopping plus 38.17% climb over the last 5 days. Even more impressive is the volume surge. Today's volume hit an astounding 32,704,833 shares, which is 17 times higher than its 30-day average volume of 1,923,418 shares. This huge relative volume tells us that institutional and retail interest is pouring into the stock right now. Chart the volume bars. This aggressive activity triggered two key strategies. 1. The algorithmic, which translates to horizontal range breakout. This strategy looks for a stock that has been trading sideways, essentially stuck within a price channel, and then breaks decisively above that resistance with expanding volume. For TRUG, this means the price has finally escaped a consolidation zone, signaling renewed buying interest that could push it higher. 2. or pre-breakout squeeze. This strategy identifies stocks that are in a tight consolidation range, often characterized by low ADX readings which indicate a lack of strong trend but are starting to show subtle signs of a potential breakout. Specifically, TRUG's price is trading above its 20-period exponential moving average EM at 1T, and volume is just beginning to expand, suggesting a coiled spring preparing for a significant move. Technical analysis deep dive. Now, let's get into the nitty-gritty of why these signals are confirmed and robust. Our system uses a multi-factor confirmation filter to eliminate false breakouts, and TRUG passed with flying colors. Show indicators on chart. First, the signal was confirmed by the VWAP and EMA alignment gate. The volume-weighted moving average VWAP gives more weight to periods with higher volume, so when the stock's price is trading above its VWAP, it signifies that buyers are in control, particularly on high-volume days. Concurrently, we see bullish EMA alignment, meaning shorter-term EMA are above longer-term EMA, which is a classic sign of an emerging uptrend. The ADX, or Average Directional Index, an indicator that measures the strength of a trend, is currently above 18. This isn't just noise, it tells us a real, developing trend is forming. And finally, the RSI, or Relative Strength Index, a momentum oscillator that measures the speed and change of price movements, scaled from 0 to 100, it is in the healthy momentum zone, specifically between 45 and 68. An RSI in this range means momentum is building but is not yet overbought or exhausted, indicating room for further upward movement. All these factors align perfectly, confirming this setup for TRUG. Imagine a stock that has been quietly coiling, building pressure like a spring, and then suddenly bursts out of its old trading range. This is precisely what our algorithmic strategy aims to capture with TRUG, signaling that the sellers who were capping the price have been overcome by new buying momentum. And simultaneously, the Palama-Onz's strategy is telling us that after a period of relative calm and consolidation, marked by the tight range and low ADX, TRUG is now showing the early signs of renewed interest and expanding volume, suggesting it's ready for an explosive move. So, what are the actionable levels for TRUG based on our scanner? Highlight levels on chart. Our scanner entry signal price is set at $1.04,443. This is the price point where the breakout was confirmed and momentum appears to be taking hold. To protect our capital, the stop loss level is placed tightly at $1.04,371. This minimizes potential losses if the breakout proves to be false or reverses. For profit taking, we have 3 target levels: TPERN at $1,5165, TP2 at $1,5,887, and TP3 at $1,6,609. These are calculated based on market structure and potential volatility. What's truly compelling here is the risk/reward ratio, an impressive 10.3. This means for every dollar you risk, you stand to gain over $10 if the trade reaches its final target, making it a very favorable setup. Again, a quick reminder, important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. As you consider TRUG, keep a close eye on a few key signals. Zoom in on chart. First, continued high volume will be critical. We want to see sustained interest, not just a one-day spike. Look for volume to remain significantly above the 30-day average. Second, monitor the price action around our stop-loss level of $1,4,371. A decisive break below this point would invalidate the bullish setup. Finally, be aware that TRUG is still 97.4% below its 52-week high of $46.50 and 54.4% above its 52-week low of 79 cents. This indicates extreme historical volatility, so managing your position size and adhering strictly to your stop loss is paramount. TRUG presents a classic small-cap opportunity with strong technical signals aligning from multiple strategies. The horizontal range breakout, pre-breakout squeeze, confirmed by aligned moving averages, strong trend, and healthy RSI, all combined with explosive 17x relative volume, make this a stock worth watching closely. If you found this analysis valuable, please hit that like button, subscribe for more in-depth stock breakdowns, and let us know in the comments which tickers you'd like us to put under the microscope next. Happy trading, and I'll see you in the next video.